G'day guys and welcome to the weekly VEMA Trader Market Scan. My name is Rhys and today I'll be running you through the trades that we looked at last week. Some of them have entered, some of them have not entered. We'll talk about them, see if there's anything we can learn from what happened with those trades. And then what we'll do is we'll head to Bitcoin, have a look at what we think might happen for this week and potentially set up any trades that we might like the look of on that. So what we'll do is we'll head to VEMA Trader and we'll get started. Righto, so I'm a big fan of bad news first, good news to follow. So we'll start with the trade that lost. So there was a long from alpha that we set up. We had no conditions on it, right? I like to just buy. I like that price, get me in there. So no conditions. Stop loss was just on the other side of the zone. We dropped the risk to 0.5 because it was against my higher time frame bias. And so this trade was a loser. Now, I did mention last week that there was a zone here that could potentially hold, but I just sort of wanted to get in on that top zone. I didn't really expect this zone to offer that much resistance. I thought if we're going to get through this first zone, there's a good chance we're coming down to that second zone. And so we had a Bravo set up, I think. We definitely had a setup, I think it was Bravo trend line, down waiting at that bottom zone. We'll talk about that in a sec. So the takeaway for this, from me, is that price did hunt. Price hunted second zone. Now that's something that I have historically seen happen quite a bit, but I just had the wrong second zone in this case. So unfortunately, this trade was a loss. If we had of used that second zone, we potentially could have been looking at quite a nice trade. But hey, that's trading, right? That's what I was seeing last week. I saw this zone and I thought, nah, not the zone for me. So that's on me. Cool. This was a loss. We've learned something from it. That's always fantastic. And now what we'll do is we will take a look at the two trades that didn't enter. Righto, so here we are on that long from, it was Bravo that I was speaking about in the last video. Now you can see that just ever so slightly got front run, right? Brutal. We got stopped out of the alpha. We didn't quite make it to Bravo to get into that backup trade. Again, that's trading. That happens. So what we kind of expected to see from there played out quite nicely. We got that really solid bounce. It would have been great to be in there. We weren't in. That's the game. I actually cancelled this monitoring. I let it keep monitoring until this morning. On this candle, when I've seen these sort of push down almost to Bravo and then the buy back up. Now that I've seen that, I kind of look at Bravo and go, right, if we get down there, I'm not as certain that I want to be in that trade as what I was previously. There's still a case to be made for it because it's kind of potentially, some sort of ascending wedge, bull flag formation. So we may end up setting up this trade again, as we get towards the end of this video when I do set these trades up. But I just looked at it this morning and went, nah, I'm not sure of this anymore. I'm going to cancel this. I'm out. I was never in, but I don't want to be in this trade right now. So the key takeaway from this, the post-trade tags I'm going to add on this is front run. So I actually already had that. I recorded this just before, but I'm coming back to redo it because I thought of a better way to do it. So the tag that I would add there is front run. Price got front run at this point. We did not use the distance to activate condition. So distance to activate essentially allows you to avoid getting front run or helps avoid you getting front run. If we used it here, that might have really helped us get into this trade. So if I tag front run, what that means is I can search front run in the analyze later and I can see all the trades where I was front run. And if it's consistently happening, then I can start to put things in place and alter my trade plan to avoid being front run. And that might be by using the distance to activate condition. So key takeaway from this one was front run. Distance to activate could have been useful, let's say. All right, cool. We will take a look at the short. Righto, so now we are looking at the short from Charlie. Now you can see price did not get anywhere near there. That's cool. A lot of my trading essentially relies on that, right? I spoke last week about how I kind of have two phases. I'm always predicting price to get there, then I enter, and then I'm predicting that next move, and that's what I'm trying to actually capitalize on. Price didn't get up there. To be honest, I still quite like the look of this. So I'm going to leave this trade monitoring. I'm not going to cancel this trade. I'm happy to leave that there because nothing's really changed about what I was expecting to see in the market. So Charlie is still a valid trade for me. I'm going to leave that on. Righto, and now for the good news. So we actually had a win last week. It was a paper trade, so nothing to show for it in the actual account game, but quite cool to get the win on that new thing that we're testing because this is a strategy that I don't normally actually do. That's why we went for paper. So if anyone remembers, I was talking about my part 1 and part 2, essentially, because I'm always trying to catch the part 2 move, and I decided last week to paper trade, trying to catch the part 1. Now, Aloe Vera had a great suggestion on YouTube recommending that we call it the phase 1, phase 2, and I am all for that because it sounds way cooler than part 1, part 2. I've actually changed the tag in that to be phase 1. So big thank you to Aloe Vera. Really appreciate your input there. In terms of what we can learn from this trade, pretty much the only thing that I see as a big takeaway here, I wouldn't even call it a big takeaway, but just a little tweak that could improve this strategy is price continued past my take profit a decent amount, right? If we'd caught the rest of that move, that's potentially a 3-to-1, which, over time, that's going to add up really, really quickly. So I'm going to add the tag price continued. I feel like I spelled something wrong. No, price continued beyond. Oh, I jinxed myself. Beyond TP. Again, if I can just keep checking that in the analyze, if I'm consistently getting that as a tag, then I know that I can potentially start shooting for bigger targets. Whether it's just in this phase 1 strategy or whether it's across all my strategies, it's just a useful tag to have. So that's my big takeaway. The other big takeaway is you might notice a button that wasn't there last week. So the devs have been hard at work, and they've now introduced the shareable trade plan. So this is a really, really cool feature, in my opinion. So one of my favorite things about this is that you can edit the chart. So you can show exactly what you want to show. So because we set up all 4 trades at once last week, this looks kind of messy at the moment, but I can come here, I can get rid of all the stuff that's not relevant. So let's get rid of the fibs. Let's get rid of, we'll keep that zone because that's what we're targeting, but we don't really need Bravo. So we can get rid of that. Volume, we can get rid of that because that's making a bit of a mess. And delta, so that was the trend line we used, so it's worth having that, and we don't really need that. So get rid of that zone, and then we can also just sort of change how much of the chart we show. So it's a really, really cool way to do it, I think. You can see the entry, you can see the exit, you can see the TA of why I entered, and you can see the risk reward that I achieved and the account growth that I achieved. So obviously this one was a paper trade, but we risked the full 1% because this was with my high time frame bias. So really, really cool to have those shareable trade plans in. You can also get to them straight from the dashboard. You don't have to go all the way in by going to share. So that'll do it too. And then you can just download it or screenshot it and send it to your friends. So really, really cool new feature. Big thanks to the devs for working on that one. That is it for the trades from last week. So we can mark this one as a review now. And then we are just left with the short from Charlie, I believe that was, that we're quite happy to leave on for this week. So what we'll do now is we will head to Bitcoin for the week ahead and we'll see what we can see. All right, so here we are on the weekly. Now, the only thing that I really care about on the weeklies at the moment is the fib levels, because we're a long way from the potential demand zone, which is down here about 34, and from the supply zone at 63. I think we've got a couple of weeks grace before we hit either of those, short of some huge moves in the market. So I'm not too focused on them at the moment. The fib levels though, the 51k, I think we could hit over the next couple of weeks. So it's something that I just want to pay attention to. I know it's at 51k now, so that's pretty much all I'm taking away from the weekly. Alright, so on the daily, the bear flag is back. So if you have been watching these videos religiously, you'll remember that I had an ascending wedge bear flag drawn in probably 3 weeks ago and 2 weeks ago, and then I got rid of it last week because we broke out of it to the upside. Now we are sort of just in a classic parallel flag, parallel bear flag, I guess. So nothing's really changed, right? I am still sort of leaning towards price heading up to that 51k region. We've had quite solid buybacks. Obviously, this candle's only been open for 2 hours, the current candle. But we've come down a fair way and we've wicked back up quite nicely. When we get down to the 4 hour, I'll show there's kind of a bull flag in there. And so yeah, I'm kind of still leaning towards a move like that, something like that. And that's pretty much it. My high time frame bias is still bearish because I believe we're in a bear flag on that frame. I think that's about it, right? There's these daily AQs. They're being reacted to very, very well. So that's cool to see. And yeah, that's really it for me on the daily. We'll see what we can see on the 4 hour. And finally, we come to the 4 hour where the action actually happens. So again, I have set up the trades and I'll just run you through them just to speed up the video a little bit because we're already approaching the 10-minute mark. So we'll try and keep it as short as we can for you guys. So what I'm really seeing on the 4 hour is that demand zone that we had set up last week. I looked at this again now that I'd sort of cleared the chart off and went, okay, I still really like the look of that. So I've reset up Bravo. So the Bravo trade is essentially exactly the same. Long, bounce, notices to activate, notices to confirm, 0.5% risk because it is against my higher time frame bias. Daily bias is still bearish. And just a fixed value stop loss, fixed value take profit. I am not targeting 51k. I may change that depending on how things go if we do get the entry and get the bounce. But for now, I'm happy to just target that 48k. If I wake up and I've got a 6.41 and price keeps coming up to 50k, I'm not going to be too fast if I've already got a 6.41 to 1 locked in. So that's how I'm going to run it for now. If that trade does enter and I monitor it, I'll try and keep you guys updated with how the monitoring happens and what I see there. Now, the two new trades essentially are the long from alpha, which is essentially a breakout of, I think I just said essentially twice in about 3 seconds, but is the breakout of what I see as a possible bull flag forming. So this is really speculative, right? I'm essentially only got one data point and a wick of the current candle. It's not something that I am super confident in terms of the bottom trend line, but the upper trend line is quite clean. You can see there has been, oh no, that's not what I wanted to do. You can see there has been 2 touches there, another touch here, another touch here. So there's been 4 touches. We've rejected really strongly off that trend line. You can see especially this move down, and that was a really solid rejection. So I see that as a pretty valid trend line. And so the bottom trend line is not so important because it's the upper trend line I'm looking for the break on. But it's just, an idea of what I think could potentially happen. And so I want to get in. If we break out to the upside of alpha, I want to be in this trade. So what I have set up is a long cross. I've put an expiry date on because I only want it to happen while we're still in what I think this bull flag could be. If I don't set an expiry date and we get way over here somewhere and price breaks out over alpha, I don't actually want to be in that trade. Excuse me. So I've set the expiry date and operate on candle close because I want to confirm the break of alpha before I get into this trade. I've set this paper because this is not my usual strategy. It's again a strategy that I want to test. So I've left this one as paper. I've gone for 0.5% account risk because it's a long. And like I said before, my daily bias is bearish. 2 to 1 minimum risk to reward. I always like to have minimum risk to reward when I've got a candle close condition because you don't know where that candle's going to close. So it could get a huge engulfing and it could just destroy your risk to reward. It's not a trade you want to be in. So I've left that as 2 to 1. I've used the other side of trend line for my stop loss. Now this is, I am never really sure how to use, which stop loss to use for these kind of breakout trades. Other side of trend line I like is it gives me the confidence of knowing there is at least a level of currently resistance you'd expect it to turn into support potentially when price or if price does break out. And so by using other side of trend line, I know my stop loss will always be 1.5% below the trend line. So I know the trend line is always between price and my stop loss, which I like knowing. So I've used the other side of trend line, targeting a fixed value of 51k, because if we do form this bull flag, break out to the upside of the bull flag, I would think my 51k target is on the cards. So I'm quite happy to target 50137. So I've sort of front run 51k a bit with that daily zone up there. The good news on this trade is the further we get into this squeeze, the better it's going to be. Because if we move, way over here, my risk to reward jacks right up, which is always really cool. So that is the risk management for this one. And in terms of the journal, I have tagged the bull flag. I'm against my high time frame bias, 38 fib level because that's relevant down here. The fibs, daily bearish bias, and mixed bias because I am bullish on the 4 hour, bearish on the daily. Test strategy because it is a test strategy, and I've named this one the flag breakout strategy. 6 confidence, and I am happy. And the final trade is essentially mimicking what we did last week with Delta, with the paper trade short from Delta. So again, we've gone paper. We've got our short, we've got cross, we've got operate on candle close. Risk management, we've gone for the full 1% because it's with my high time frame bias. It is still short. Minimum risk reward, I've dropped to 1.5 for this one because I'm slightly more confident in it than the alpha breakout. I feel like if this zone does break, there's a good chance we're going to head down and hunt these lower zones. So I sort of am happy to take that smaller risk reward because it's confirmed by that break. It's also because it's a horizontal level, right? I never love trend lines because they're so subjective. Horizontals are always a bit more objective, so I'm happy to drop my minimum risk reward a little bit because I'm more confident in this trade. Fixed value stop loss, fixed value take profit. I'm just targeting that daily zone. It may get front run. There is a 4-hour zone and the 61.8 fib in between. But I kind of feel like if we lose, where are we, about the 43k zone, this 4-hour zone, it may definitely hold, but there's a good chance we'll punch it because the 61.8 is down there. Price might hunt that. That daily zone's down there. And so in the same way that I spoke about price often hunting the second zone in the review of last week's trades, I could see that potentially happening. And even if it doesn't, there's a good chance I'll move my stop loss into a less of a loss or into profit by the time price gets down there and potentially bounces off the 42k zone. So I'm quite happy to take the bigger target and then monitor this one as things play out. In terms of the journal, I've tagged phase 1 again because that's what I've named this strategy, because I would essentially be looking for that move and then I'd be trying to catch longs from there. So I have tagged phase 1 and break down with my high time frame bias. My daily bias is bearish and a 4-hour demand zone. I've got a 6 and I am happy. So those are my trades for the week. Now don't forget there is also a short from up here that we set up last week. That's still in the monitoring state. We left that one on. So those 4 trades, very similar to last week where we had 4 trades. So yeah, that's it from me. It'll be very interesting to see what plays out this week. Have a great day and happy trading. I'll talk to you guys soon.